Hi everyone, I'm Matthew John and welcome to this week's Weekly Market Pulse. Well, having a quick look at the clearance rate on the weekend, sitting at 54%. We did only have 153 auctions on the weekend just gone, obviously being the Melbourne Cup on the Tuesday. It was a long weekend for some, so the volume levels were down, but it was sitting around the same percentage in terms of clearance rate as the week before. Now, the Reserve Bank of Australia have given us no surprises again with leaving the official cash rate on hold at 1.5%. This is now the 27th consecutive month that it has been left on hold, and it does look like it's probably going to stay that way for some time, even though they are signing that the economy is going really well, that inflation is at a low as well as unemployment, but obviously with the housing market in a little bit of a fragile position at the moment, they're not looking like they're going to push it up anytime soon. So now the Christmas period is coming up very, very soon. It's flying through now, and we are expecting to see probably 1 to 2 weeks of new properties come onto the market, and then that's probably going to be it for the remainder of the year. So this week and next week, there should be some properties coming out with a 4-week auction campaign period, which will leave the auctions right up until mid-December. Once we get into late November, we're expecting the new stock levels to drop off substantially. Now, in saying that, the stock levels overall are actually quite high. The new stock coming onto the market is a lot lower than what we usually expect to see this time of year, but obviously properties are hanging around a little bit longer than they have been in previous years. So there's actually quite a lot of stock on the market, and a lot that really does need to clear out by December to avoid that kind of Christmas, New Year's period where obviously people don't want their properties hanging around. But it looks like there will be a few over that period, because obviously there is a lot of stock on the moment, and whether there's going to be enough buyers to take that off at this point in time. Now, a lot of the properties that are coming on the market at the moment are actually from investors who are having to sell, who may have bought 2 or 3 years ago on an interest-only loan, and that loan period is now up. So a lot of these loans are going from interest-only to principal and interest, which is going to add probably $300, $400, $500 per month for an investor on an investment property. A lot of those people just can't take that hit at the moment. So a lot of the properties that are coming on the market are actually investment properties that are being sold for investors trying to avoid going into that principal and interest period. So we are seeing an influx of those properties come on the market, which, along with the spring market, as we've seen previously, is quite busy, so that has pushed the number of properties that are up, as I said before. But all that just adds up to fantastic buying conditions, like we've said previously. You've really, as a buyer, only got 1 or 2 more weeks for new properties to be coming on the market, and then, as I said, it's really going to quieten down till the end of the year. So if you are out and about looking and you do see a few things that you've got your eyes on at the moment, we really suggest that you go in and have a crack. Vendors are very open to receiving offers at the moment. The clearance rates are obviously around 50-55%, so 1 in every 2 property that is going to auction is not selling. So vendors are very open, very motivated to sell coming up to this end of year period. So if you are looking, suggest you get in there and put in offers, make sure your finance is sorted, and you might just get yourself a great Christmas bargain by the end of the year. That's all for this week. Look forward to seeing you next week.